Alright, you've made it. We have one last video to watch and one last assumption to talk about, and that's called going concern. You just answered a question, assuming you began the school year at Light and knowing you'd be transferring to another school 5 weeks later. Would this affect how hard you would work as a student for those 5 weeks? Please explain. Now, my guess is some of you guys said, no, it wouldn't affect how hard I work. I'm going to work hard whether or not I'm at Leiden High School or I transfer to another school. But I also guess that some of you guys maybe wrote, yeah, it is going to affect how I work. Since I know that I'm going to be leaving the school in 5 weeks, maybe I wouldn't study for quizzes. Maybe I wouldn't hand in homework. Since you know something's going to happen in the future, such as 5 weeks down, the quality of how hard you work might drastically change. That's kind of what this next assumption is related to, called going concern. So let's go ahead and chat about it. Okay, again, the answer is kind of in the name, going concern. Going means you're moving forward, and we know what concern means. So when we combine that together, this whole assumption is based on where the business thinks it'll be in the future. So, external users can assume the following, that when they read financial statements, they can assume that the business plans to continue operating into the future and does not intend to close down, declare bankruptcy, or liquidate by selling off all their assets. Okay? Now, this assumption, in my opinion, is one of the hardest to understand. Let me read that again. When reading financial statements, external users can assume that this business thinks it's healthy, it plans on operating as long as it can, it does not plan on shutting or closing down. Second point, when reading financial statements, one can assume that this business plans to keep their assets long enough to recover their costs, and that the business plans to pay off all debts owed to creditors. So what does that mean? If I buy a machine to produce my goods, I don't anticipate that machine to break down in a year. I anticipate that my business is going to be around long enough, say 10 years, so that I can recoup the cost. If that machine cost me $50,000 to buy, I expect that at the very least my business is going to be open long enough to have that machine generate $50,000 in revenue, so that I recoup the costs that it took me to pay to acquire that machine. Okay. Now, I also expect to be around long enough to pay off all the debts I owe to my creditors. Okay. Why? Because I'm operating as a going concern. I think my business is doing well, and if it wasn't, I would tell my external users otherwise. Let's take a look at more specifically what this means. Going concern allows a business to break down their assets and liabilities into two specific categories. For example, because they plan on operating into the near future, they can categorize assets as current, which means these are the assets they plan on using up within 1 year. Like supplies, that's stuff a business owns, but at the end of a year they expect that all those supplies are going to be gone and that they're going to have to purchase new ones. Cash, they expect that cash, they're going to use that cash throughout the year. Now, because they operate as a going concern, they can assume that they're going to be around into the future. Because of that, they can classify some assets as long-term, ones that aren't going to expire or be used up within 1 year. Assets that they plan to keep for a very long time, like a delivery truck. Since I assume I'm going to be around forever, I'm going to assume that I'm going to use that delivery truck for the next 10 years. Equipment, things like that. The opposite side of that would be liabilities, broken down into two categories. Current liabilities, debt they plan to pay back within 1 year, or long-term liabilities because I plan to be in business 10 years from now, everything's going well. Some of this debt, maybe like a mortgage on the property I bought, or a really expensive piece of machine I have to pay back, I'm going to assume this is going to take me like 10, maybe 20, maybe 30 years to pay off, and that's okay because I'm still going to be around. So it allows a business to break down things more specifically, which also gives external users more information about the business. Okay? Here's an example of what this looks like. Let's start with the table on the right. This is how it should be. Mr. P's Pizza is a going concern. So I've assigned some values here. Delivery truck. It cost me $10,000 to purchase that truck. Therefore, on my financial statement, I'm going to record that as a truck worth $10,000 that I own. Okay? Now, if we look at the left side and we compare this, notice that if I was reporting this financial statement not as a going concern, that value is $5,000. Here's why. If I am not operating as a going concern, then that means I don't plan on being in business much longer. Okay? So I might have to all of a sudden liquidate and sell off everything I own to get the money to pay off my debt. Now that truck might be worth $10,000, But if I'm hard pressed up against time and I got to sell it to anybody I can find because I need that money to pay debt, based on fair market value, I might only get $5,000 for that truck because I got to sell it right away. See the big difference there? Same thing with kitchen equipment. If I operate as a going concern, that equipment, I might have purchased $50,000 worth of equipment. That's how much equipment I own. But all of a sudden, if I decide I can't operate as a going concern, I got to liquidate, I have to sell off everything I own to pay my debt. I might only be able to find a buyer that's willing to give me $20,000 for that equipment. And guess what? I'm going to have to take it because I need that money to pay off my debt. Now the last one is critical. This one is related to liabilities. Because I operate as a going concern, let's say I took out a $100,000 bank loan from Chase Bank. Now, because I plan to operate into the future, the next 10, 15, 20 years, forever, I can pay Chase back a little bit each year. So if I owe them $100,000, maybe I'm going to pay them back $10,000 for each of the next 10 years. That way on my financial statement, when creditors view this, they're only going to see that I have a liability of $10,000 each year to Chase. Why? Because it's going to take me 10 years to pay this off. If I didn't operate as a going concern, all of a sudden now I owe Chase that full $100,000 immediately because now I'm going bankrupt. Okay? So when businesses operate as a going concern, their assets are valued at what they paid to purchase them, not at what the fair market value is or what you anticipate you would get if you had to liquidate. In addition, operating as a going concern allows you to spread out debt owed over multiple years, which decreases the liabilities that you show on your financial reports. So basically it allows you to kind of like look a little bit better. Okay? Again, if we go to Google and we type in liquidation sale, let's see what we get. Now all these pictures that you see, like this one, going out of business sale. This business, I see an orange sign there right in front of the door. It says everything is going to be 25 to 50% cheaper. In other words, they're selling these things for probably below what they paid to acquire them. Why? Because they no longer see themselves operating as a going concern and they need that money to pay off their debt. So the value of all their assets, their merchandise, their inventory is significantly decreased. Okay? The going concern assumption says when we look at financial statements, we can assume that you as the business expect to be around forever, that you're going to use the assets the way they're intended for. If you buy a machine, we expect that machine to last for a long time. If you take out a large loan from a bank, we expect that this is going to take you a while to pay them back because you're operating as a going concern. So that's the going concern assumption. Okay? Those are the four main assumptions. The last thing I want you to do is to go back to the document and take the kind of mock check your understanding quiz in preparation for tomorrow's quiz. Good luck.